Good afternoon, everyone. I, Dr. Preeti Sharma, on behalf of AGBS Noida, would like to invite everyone to welcome Mr. Sanjeev Rajdan. Mr. Rajdan is having a rich experience of more than 32 years in financial services with major players in financial service industries. Currently, he is serving as Global Head Commercial Payment at NIUM Singapore. He started a humble beginning as a sales executive in Unitel Corporation way back in 1987. After that, he has never looked back and served the industry at various capacities during his long stint with the major players in financial service industry. He has spent a long period of more than 19 years in American Express. His areas of expertise are business development, strategy formulation. He has provided his valuable services in handling major portfolios as commercial card payments, merchant acceptance, partnership, supply chain payments, and expense management. Now, I would like to invite Sir to enlighten the student with his vast knowledge and share the valuable insight with his students. Over to you, Sir.
Thank you, Dr. Preeti Sharma, and good afternoon to all. First of all, I'm personally delighted to have an opportunity to speak to Amity and to the Amity faculty and students. I'm very grateful for being given this opportunity. So before I kind of talk a little bit about this whole topic around working capitals and, especially the small and medium enterprises and how this is COVID kind of a situation has impacted them and what Niam as an organization has done. I just want to say one thing. My introduction was being very generously given, but I'm from Delhi and I still have very strong roots and love for India and for Delhi. I'm still very much an Indian and I look forward to come back in my life at one point of time and settle there. And Amity is very familiar to me because my daughter used to study at Amity International School before we moved out to Hong Kong, and then I'm sure everything has changed now there. So I would love to come back and have a visit of that facility. But moving on, what we are going to cover today is I want to take 2 minutes to kind of introduce the organization called Niam. If you actually see the name, Niam means rules. It's a Hindi word. The company is founded by Indians. So they decided to name the company or rebrand the organization as Niam last year. Prior to that, we were called InstaRem or Instant Remittances. We have a very substantial presence in India, which remains as a major center of operation, but we are headquartered out of Singapore. So our global headquarters is Singapore, and a lot of senior leadership sits in Singapore, but also there is an equal amount of senior leadership that sits out of India. What we're also going to talk a little bit about is working capital and of course, what's happening in the market and how the SMEs are kind of reacting to the requirement of working capital, especially in a COVID situation. And then I'll briefly share with you this innovative product that we have launched. It's called BPSP or Business Payment Solution Provider. So we're going to talk a little bit about it and how does it work. And I will share with you a use case spotlight that is very popular of how companies use this solution for. And I've tried to build it contextually for India kind of cost so that you can get a feel of if this was to be done in India, then how it would work. And open for questions. So I don't want to make it a monologue. I want to make it a dialogue. So feel free to ask questions. And I don't mind taking questions in between as well after I've been through a few of my slides and then go on post that. So if you talk about Niam as an organization, we were called InstaRem. We about 360 plus employees. I think we are hiring a lot more people now. We expect it to grow to about 450 in the next 2 to 3 quarters. Headquartered out of Singapore, we have offices in 10 countries globally. What we want to become is a banking as a service platform. So a lot of the effort that is going around in Niam is building our capabilities to make it like an open banking platform. And I'll talk a little bit about it. We are also partnering with both MasterCard and Visa as their card issuer. So we have our own card issuing bins. Bins is what you get before you can become a card issuer. You need to have your own bin to be called as a direct issuer of MasterCard or Visa, like a bank. So we are one of them. We're also licensed in 9 countries and the European Union to issue cards and to issue other kind of payment products. All our platforms are PSI DSS certified. So we are a tech company. We hire a lot of people who are coming from an engineering background or who are developers and coders, because there are also a lot of demand for them in the organization as we are developing a lot of new products. But there is also a lot of opportunity for people who are wanting to make a career in product or back office, customer services, human resources, marketing, communications. We are at present hiring a couple of people in communications as well. So there's a whole diversity of roles that we offer for people to look at if they're interested to join. And I did tell the leadership here that I would introduce them to our HR head for the future. So that's about us. The company is founded by this guy called Prajit Nanu, as you can see him in the picture, headquartered out of Singapore. That's the Singapore, skyline facing the water. And as you see here, 3 words: send, spend, and receive. Those are the 3 verticals in which Niam has been building itself. Send is how the company started, which was basically in terms of moving money across the borders. And that's how we were called InstaRem or instant remittances, which is part of Send. Another part of Send is this product called BPSP, which we are going to be talking about. Spend is more around our card capabilities and the fact that we are issuing MasterCard and Visa ourselves. We issue currently prepaid cards, but we have plans to issue credit cards as well. And the receive part of our business is focused on collections. So this is where we help customers to collect money across from their buyers who could be based outside of their home market. So a Singaporean supplier wanting to collect money from a buyer in UK, we help them collect money in a much faster, seamless, and a cost-effective manner. So these are the 3 major verticals in this organization. I look after all the 3, and my role in this organization is basically to build the business. So I'm the head of business development, sales, whatever you want to call it, and partnerships. Now, one important thing I wanted to also talk about is, personally for me, I was working in some of the large organizations like American Express, and then, First Data also, and then HSBC. So a lot of people ask me this question that, why would you want to go to Niam, or why would you want to move to a fintech? There are a lot of reasons for that. The first reason is that it allows you a lot of, agile environment to experiment and grow. And, I've always believed that the possibility to know never ends. The knowledge that you acquire, whether you are part of a educational curriculum or you're part of a professional environment, that knowledge is definitely helpful, but in a way it is also limited, because what you know is what you know. What you don't know is so much, kind of an open area or a gray area where you would want to go and learn. So the possibility to learn and be in an agile environment is always something that is very attractive. And that's what brought me to Niam, because I wanted to I'm very passionate about growing B2B kind of payments using cards, because all my life I have been part of the cards world. So I wanted to experiment and see whether that's something we can actually do in a much bigger platform. And that's what Niam provided me as an opportunity. And if you look at this company, we do both domestic and cross-border payments. We have multi-currency options that we can do. So there's a lot of agility around the product stack that we have. The fact that there is not much of bureaucracy in the way we operate. It's a flat organization. You can kind of do whatever you want. You get a lot of support from product people who will work with you. And the fact that, from a competitiveness in the market, we're very transparent and open in pricing. And we have a robust customer service model. So those are some of the value differentiators. More importantly, we are funded by blue chips. Visa is a very big investor in Niam. Another big investor in Niam is Singapore Ministry of Finance, which is through Temasek, which are the two. Temasek has funding arms called Vertex and Fullerton. So they own 33% of Niam. And then there are a lot, Ripple is another big investor in Niam. So there are a lot of people who have invested in Niam who are really the big blue chips. So there's a lot of stability in the organization. Even in COVID times, we are doing very, very well. We're pretty robust and sound on the financial side as well. So overall, the experience at Niam has been fantastic. And if you are interested to know more, you can either reach me through your faculty. Okay, let's move on to look at this whole piece around working capital and how are the SMEs managing the COVID, or how are they wanting to map this whole piece around managing cash flow in a difficult environment. So one of the things that is very, very certain is that COVID will impact everybody. It will impact I mean SME client, because it's not just limited to who they know, because the market's being very connected. You know who you are connected with, but you don't know who they are connected with further downstream or upstream. So the whole impact on the blind spots, and that's a very worrying thing in today's environment, is that even if I know myself around my own cash flow and around my own business models and around how I want to transverse this path, I don't know about how my clients or their clients upstream or downstream are going to behave. So that brings a lot of uncertainty in terms of how the impact of this COVID is. The traditional models around how business was being done are all being challenged. The traditional models, how we would work in a professional environment, are being challenged. So all around us, there is continuous change and a challenging situation. So if you look at what's the concern companies have, there's a survey done by PwC around more than 1,000 to 2,000 SMEs around what's the impact of COVID. So majority of them are saying that they feel there's going to be a significant impact. Now, so that does not mean that all industries are going through an impact. There are certain industries where the impact is lower in comparison to some of the other ones, but by far and large, the generic view is that it is definitely going to have a serious impact, and they have a great amount of concern. Of course, certain types of industries have felt the impact a little bit lower. The good news is that things are getting opened up by the government. So India, for example, I read the other day that even the metro has started. So a lot of stuff is opening up. People are actually going out. Offices have opened up. So in such an environment, what can an SME do? So from a situation where there was an initial shock around this whole COVID piece, and then they were scrambling to get into a crisis management mode, I think now what we are looking at is people are looking at how do I frame my response, especially not just about myself, but about my upstream and downstream blind spots, because I don't know what's going to happen in those blind spots. There is, of course, a continuous focus towards managing expenses, because even though offices have opened up, the business is not as usual. There's still a big downturn in the economy around the contraction that is happening. It's not just in India. Contraction is happening all over the world. So workforce, and we all know there's a lot of unfortunate cases of people losing jobs. Getting jobs will become more difficult and harder in the future. So companies are going to focus on workforce expenses. And one of the things that have come out of this COVID is that people are now looking at that. Do we need real estate? Do we need kind of large office spaces for us to work? Because productivity seems to be doing pretty fine, even if people are working from home. So a lot of change is happening around how people are looking at the whole workforce piece. And it's kind of impacting the SMEs quite a bit. Most of the SMEs are quite keen to now look at digitizing operations. So if you look at the digitization journey, digitization is a word that has been used in every possible context. But if you look at the digitization journey, what has happened was that the adoption of digitization was much more at the, let's say, the large corporates and multinationals. The flow of digitization towards the small end of the medium enterprises was still coming up, because cash and the use of cash and traditional checks still is an integral part of the economy. Though there has been a lot of growth in digital money and the use of digital currencies, there is still, or digital payment instruments, there's still been in some countries a very high prevalence of cash and the use of checks and the so-called traditional ways of payment. But as you look at how things are now moving, people are less reluctant to take cash. They all want to take plastic payment, because people are looking at how do I optimize my resources, operations, how do I optimize the way I handle my cash flow, and how do I maximize my financing options. So one of the fallouts of COVID has been that banks are worried about bankruptcies, and there is a slowdown in their ability to give credit. They become more stringent in the way they do want to give credit. So creating alternative options, or creating options of generating liquidity for continuous management of working capital is something that is of paramount importance. And also this kind of provides an opportunity for SMEs to build their brand, because SMEs who can survive this period are going to come out very strong once this COVID thing subsides. So building your brand as a resilient organization that can go through this COVID period is an important part of the strategy that most of the companies are adopting. It holds true for the SMEs even more, because they are more prone to failure in such kind of a difficult environment. Now, on the other hand, there is of course a lot of support also available. So different governments have been given different kinds of support. I can give you an example. In Singapore, for example, the government is even paying part of the wages for Singaporean citizens to companies, so that they are not retrenched. There are supports on the rental part of it for office premises. There is also, cash support being given. Moratoriums on interest payments have been announced as well. There is also, in certain countries, there is also a push by the government to provide more liquidity so that the banks can give loans, and the governments have been telling the central banks or the commercial banks that they would guarantee the loan defaults to a certain extent. And if you see, all these are basically efforts to just make sure that the sentiment doesn't become really, really bad. It's already bad, but shouldn't become really bad, and there shouldn't be a situation where the economy just collapses. So every government at the moment is trying to do what they can based on their, the kind of budgetary allocations that they can provide to sustain just to make sure that the SMEs just float, and then prepare them for growth once this whole COVID piece subsides. So right now it is more around how do I sustain, how do I kind of keep the whole thing afloat, and then at the same time looking at preparing for the growth phase, hopefully, which should come once the vaccines are out and once this whole international hue and cry about COVID kind of subsides. So in such a situation, typically what would an SME, let's say if you are a finance person in an SME environment, what would you be focusing on? Or if you were a finance director, or if you were a CFO, or even if you were an accounts payable person or a treasury person, different roles are there. What would you all kind of look at? So some of the things people would look at, what's my borrowing cost and what is the fees I have to pay? So if I can get a solution where my cost of capital doesn't go through the roof, then that helps me to manage my overall balance sheet. And that's the reason why borrowing costs and fees would definitely be something that I would focus on. The other part is efficiencies in terms of how do I manage my days payable outstanding and days sales outstanding. Basically, days payable outstanding means the time I need to enter into a credit relationship with my suppliers in terms of when I pay them. And days sales outstanding is more in terms of what's the time period in which I'm collecting money from my customers, so that I have to borrow less. If I can balance my DPO and DSO, I don't need to borrow from the market and pay interest for it. So it's more around how do I manage my cash flow efficiencies. Then there is whole piece around how do I identify areas where I would want to invest once this COVID thing subsides. How do I create allocation of dollars for me to leverage that to invest in growth? And then, if there are benefits that I can get either from the government or from other institutions that I can able to negotiate to manage my finance. Now on the right side, I've shown some kind of options that companies always have. All of these options currently exist, but they come with certain kind of dependencies. So a company can't go in for an overdraft. Nowadays, unsecured overdrafts are practically out of the book. People have to provide collaterals because banks are highly suspicious about giving unsecured loans. Invoice factoring or working capital loans are still a way to go. But even there, because there have been some bankruptcies which have been very prominent, banks have kind of pulled their hands down, and the loans and the lines they're giving are much less than what they would have otherwise given. So while the traditional options of working capital are still there, there is a challenge around how these options can be made available and to what extent can they provide capital to companies, especially SMEs. So in this whole piece, one of the things that is also happening is that there is a paradigm shift. And that paradigm shift is where companies have started to think about that, how do I create alternate ways of generating capital? And one of those alternate ways of generating capital, which has been also being pushed around a lot by the card networks like MasterCard and Visa, is the use of a credit card and the limit on that is available on the credit card for making supplier payments. So if you look at card, and the fact that there's a word credit attached to it means that there is a capacity available on this 16-digit number for it to be used for making a payment. The credit over here, of course, is an unsecured credit, or it could be a secured credit depending on the bank that is issuing that credit. But fundamentally in the market, if assuming that a SME already exists and pre-COVID, before COVID happened, they had credit card, technically they have a limit available on it. On one side of it, the opportunity is that because travel and entertainment is not happening to the same extent as it used to happen, as you know, global travel is hardly happening, and entertainment also has been restricted. The limits on these cards, which companies had, or what companies have, corporate cards or business cards, the limits on these cards have become unutilized. Because prior to this, when they had the cards and they were traveling, the limits were being basically utilized for travel and entertainment, which means paying for hotels, paying for airline tickets, restaurants, and so on and so forth. But now, because that has kind of taken a back seat, this limit, which still resides on the 16-digit number, is unutilized. So in a way, it's an opportunity because the credit limit is available for you to use as an SME. The challenge is acceptance. The acceptance, but when we talk about acceptance, what we are talking about is that to use the 16-digit number, you need someone to accept it as a payment instrument. And the suppliers that typically a company would use or want to pay for are not set up for accepting card-based payments. And that's why this whole challenge around using card as an instrument of payment has always been restricted to travel and entertainment, where there has been traditional acceptance in the fields of like hotels and restaurants and air ticketing. But the moment you step beyond that into the broader accounts payable and you start looking at what are the other expenses the company may have, you start finding that there is very low acceptance, and suppliers are still taking payments through traditional electronic fund transfer methods, or even in some cases through checks. So that's why there's a challenge, but at the same time, there's an opportunity. So one of the questions is that why is it that suppliers don't want to take card? Why is it that we have a challenge around acceptance? It stems in from some basic facts that when we are talking about two companies talking to each other, one being a buyer and the other being a supplier, typically they will enter into contracted terms. So the buyer, because they have an aggregated demand, will use that as a lever to discuss rates and ask for discounts. Unlike a retail customer like you and me, when we go out to a shop to buy something, we don't aggregate demand. So we are very much, driven by whatever the shopkeeper is telling you is the price of that good that you want to buy. But if you are a corporate, you have an aggregated demand capability. So what you are saying to a supplier is, if you want to supply me a particular product, I want it at a particular price. So the supplier is already giving heavy discounts, and to that extent, they have a low margin. At the same time, I can also negotiate terms and when I'm going to pay you for the goods that you are supplying to me. So there are also a cost of capital that the supplier has to take or bake in for the credit terms that they are providing. The second challenge is that most suppliers, even if you want to set them up for card acceptance, there's a whole lot of time and effort involved, because the whole process around how they can actually accept a card-based transaction is very complicated. It requires for them also to invest in setting up a whole process in the accounts payable side, which they may or may not want to do. And the last piece is that use of a card-based payment solution to pay someone who could be overseas as a supplier is even more expensive, because a card may be issued in INR or in SGD and you're trying to make a payment in USD. So there's a cross-border fee which could be as high as 3.5% that is added into your card statement as a cost. So it becomes very expensive. For travel and entertainment, it kind of works because the average transaction size is very small, and it's more like you are going for a short duration on a business trip, so you use card. But the moment it becomes broader supplier payments, where you could be paying a million or a few $1 million worth of payments, then that 3.5% can become a very expensive part of the cost. So these are some of the reasons why traditionally we've always had a challenge in the cards being used as a way to make payments in the supplier space. So what has changed now is that there's this whole new concept of BPSP that has come up. It was founded by Visa last year. MasterCard also is now offering this. They call it as MOR. BPSP stands for Business Payments Services Provider. MOR stands for Merchant of Record. Both are the same concepts. Basically, this concept is built around focusing on the kind of payments the company has, where you are targeting the use of a 16-digit plastic issued by, or plastic or virtual, issued by Master and Visa networks, for making those payments where there is no card acceptance happening. So if you look on the right side, you can see, for example, a company having an office space wanting to pay rent to the landlord. Typically, a landlord is monopolistic, right? It's their building, they have a tenancy agreement. You go and tell your landlord, I want to pay your rent by card. He's going to say, sorry, buddy, you're going to pay me the rent on the 1st of the month. No way. Just make an electronic fund transfer or vacate my building. So in a monopolistic situation where the other party gives you no choice, the use of card is definitely something that you're going to find very difficult. Same is paying government taxes, for example. You can't pay taxes using card. No sovereign would want to pay a merchant fee or a cost for accepting card on taxes. Then insurances. Many insurances do take cards, but they will take it under certain conditions for the initial premiums. But they may not want to take it at the corporate level. They will just do it at the retail level. And then subsequent premiums, they don't want to take it on card. Utilities, salary. Now, another big example is salaries. Now, a lot of companies are there, especially SMEs, who want to pay payroll, but payroll cannot be paid through card. There is no way that exists where you can put the salary of the employees on a card. So there are a lot of these kind of payments or expenses which are part of accounts payable in an organization, which are part of their expenses in the short term, for which they need working capital, but they're not able to put it on card. So what the card networks and the card issuers. So card issuers are the banks who issue cards. We are also a card issuer. So what the card networks do is they have now created a structure in enabling these B2B kind of payments to happen under this BPSP model. So the structure is built in such a manner that the card issuer and the network like Visa or Master will pre-agree for each country what is the margin the issuer wants on each transaction that will happen in a B2B context. So we're not talking here about retail. We are talking here about corporate cards and business card related transactions, which are basically for business purposes. And that's where the issuer and the network will agree on for each of the markets. So there's specifically for India, there's specific for Singapore, Malaysia, so on and so forth. Each market, the issuers in that market and the network will pre-agree on what is the margin the issuer will get on each transaction. That margin is then overlaid on top with a margin for the network, for the merchant acquirer, and a fintech like us who provide a technology platform for the card to be used. So this whole concept is built around the supplier who is, say, the landlord for the building or the government for taxes or an insurance company or whoever else. They are out of the equation. They don't need to be converted into card accepting merchants. What happens is that a fintech like Niam will come in between as a master merchant or as a merchant of record, sorry. And the customer who is the SME uses the card on the Niam platform or the fintech platform that is providing it. And they accept the card, and then the settlement of the card funds is then transferred to the beneficiary like a normal electronic fund transfer. So the beauty of this concept is that it does away the need for the supplier to be card accepting merchant. So if you remember, I was talking about all the challenges why a supplier doesn't want to take card. So all those go away because you are not even talking about supplier being card accepting merchant. What you are talking now here is a customer who has a card, is interested in cash flow, comes and uses the card on a platform provided by Niam or a fintech like Niam. There are our Me Too companies in India also that provide this kind of a platform where a customer or an SME can come in, use the card and say, I want to make a payment to Amity University. And then what we will do is charge the card for 100,000 rupees and then transfer the money to Amity University. So Amity University, when they receive the money, will see it as a payment coming through a normal electronic fund transfer. They don't even know that the customer who paid them 100,000 charged it on the card because it was charged with the in-between party coming in and providing that facilitation process, which is a fintech, and we are one of them. So basically what you're enabling is opening the whole opportunity of how a card can be used and how a credit limit available on the card can be used as a working capital solution by getting rid of the need for the suppliers to be card accepting, because you are providing a facilitation service in between through a platform, a digital platform that allows the use of the card as a master aggregator. And this concept is now highly supported by the networks, Visa and MasterCard. Another angle in this is cross-border payments. So what happens is that a company like Niam, or which has a cross-border remittance license, what it can also then do is charge the credit card of the customer and then convert that rupee into, say, US dollars or euros or whatever currency the customer wants to send it to, and remit that fund overseas at a much cheaper cost than if the customer was to use the card directly with the supplier in UK or US. So that 3.5% as FX fee that otherwise they would have paid is also saved by the client. So the value that happens for the customer is not just the cash flow, but also the opportunity to save cross-border remittance fees and charges, which would have been paid by them had they used the card directly with the client, with their supplier. I think we are just halfway through that. Is there any question that anybody has at this stage?
Yes, sir. Yes, sir. We have a question from one MBA student, Shriwali Singh. And the question is, how do you think that SMEs will make a comeback after COVID-19?
Oh, well, it's very, very, see, it's anybody's conjecture. There is no, everybody's talking here and there about, COVID is going to go away in what period of time. Till the vaccine comes, and not just the vaccine comes, till the vaccine has been tested to be effective, the business sentiment is going to continue to suffer. Uh, when I say business sentiment is going to suffer, it will vary across industries. There is no thumb rule that says that the sentiment will remain the same across all industries. That's not true. It will vary according to the industry that you're in. So it's no rocket science for anybody to know hospitality industry or travel industry, for example, is the most hit. And if you look at the SMEs in that space, especially the travel agencies, the mom and pop shops that have all been out there, they are really struggling. There's no business. They've fired a lot of their workforce. Um, Now, they will take perhaps the longest in the curve to come back. Whether there will be a hockey stick kind of a growth return, the answer probably is no. The reason for that is that a lot of other factors are impacting the growth momentum post-COVID, and that would be factors beyond your own shores of the country, because nowadays the world is so much globalized and interconnected that how the situation will happen in other countries, uh, especially the key trading partners with whom India trades, or who, for example, Singapore trades. If I talk about the country that I am based in at the moment, uh, it will be a major influencer of how things will shape up for SMEs to come back. From the interface that I have with SMEs, at least even in developed countries like Singapore, there is a lot of pressure on cash flow. They don't have, the business volumes are down by a whopping 50 to 60%. So somebody who was doing $100 worth of business is right now only doing $40. Even if they have opened up, they are not seeing the kind of robust growth. Slowly it is happening. It will take time. A lot of worries there on the blind spots. I don't know even how my customer is behaving, how their liquidity and cash flow situation is, how their client's cash flow situation is, and it is all interconnected. It's all a ripple. So if downstream people have defaults, they will have upstream impact, and it will come to me as well. So am I willing to take risk? Mostly they will say no. When will I be willing to take risk? I want to wait and watch. So as situation stabilizes, then I will want to risk myself a little bit more. So that's where we are at the moment. There is no magical answer. There is no answer to say by this time things will start happening. There's a lot of uncertainty because nobody knows how it will happen, whether there will be a phase 2, whether there will be a phase 3, whether the vaccine is going to be effective. There's a lot of talk around vaccine coming at the end of the year. Now they're talking about first quarter next year. So all those are factors that are going to play a very important role around how the economy will rebound and how the industries will start behaving again.
Okay, sir, one more question. Since you are related to strategy making in terms of credit card and other financial services, and you know that moratorium, like earlier it was for 2 months, then now it is increasing. Moratorium has now again been increased. So what it is going to make an impact on like entire situation in banking situation and on NPAs, and how this situation can be controlled in future?
So moratorium is a matter of choice. It's not a must. So I don't know the person who asked this question, what they're angling at. If I talk to about moratoriums, they were announced in India rather than in other countries outside. For example, in Singapore, there is no moratorium. But in markets like India also, where a moratorium was announced, it was never a must. It was always a choice. So from a choice standpoint, if you are looking at that, I want to kind of not pay the loan, your second choice is to pay the interest. because it's just a recalibration of the period in which you have to pay back. It does not mean that you don't have to pay back. It only means that there's going to be a recalibration. Most of the loans that they give in India, other than personal loans, most of the loans that they give in India are against the security. So it's either a housing loan where you are a vehicle loan, so they already have amortized the underlying asset against which that loan was given. And most of these loans are for a period that can stretch from 10 to 20 years. Most people who are in the younger age profile will take a longer period for the loan because the EMI is spread over a period of time. So unless there is a decline in the intrinsic value of the asset, which is the underlying asset against which that loan has been given, I don't see fundamentally that it will lead to a huge amount of NPAs. What it will probably be a cause of concern is that if there is a continual workforce impact in the ability of people to have cash flow to be able to pay for those loans, then yes, the problem will become bigger, and the governments would need to come and capitalize the banks to cover for the bad debts that will arise. But at this moment, from what it seems like, the underlying assets against which these loans have been given are still holding on in terms of their value. There hasn't been a sharp decline in that value, creating a bubble of NPAs. So it's a wait and watch game. Let's see how it happens. But moratorium was a very interesting concept. It never was a must thing. It was always a choice. It depends on what you exercise as a choice. There are pros and cons around it.
Okay, one last question from one is MBA student for this first half. Like, what are the things which the student should have, like, for job profile in your company? Like, what all is required for them to join your organization?
So I'm very good, very focused student, right? Straight away on the opportunity to latch on for a job. And rightly so. I think everybody should be concerned about jobs. I am concerned about jobs too. It doesn't really matter whether you are a student or you are a person with 25, 30 years experience. We're all facing uncertainty. Uh, the question around what's the profile of candidates that we hire, as I was saying before, we are a technology company. So a lot of the roles that we hire for are where we need people with a tech background, either they are coders or developers. So obviously with a software engineering background. But there is also hiring that we do in HR, in product, finance, communications. So we have a variety of roles, and all these roles, and we are a growing company, as a matter of fact. We are expanding, opening new offices in India. So obviously there will be a demand for hiring talent, and we do hire interns as well. So obviously, if you are interested at some stage to look at Niam as an organization, I'll encourage you to go to Glassdoor, have a look at the Niam page, read the reviews about the company, and if that motivates you, yeah, sure, we can introduce you to the HR people.
Thank you, sir. You can go ahead with the session. As in, when we'll get more questions, we'll be taking those questions in.
Okay. So just an illustration of how this works. So I'm now moving into the last phase of the few of the slides that I have. So here what you can see is how does it work. So if you see in the extreme left, this is typically an issuing bank. Let's say a bank like ICICI. They will typically issue the card. So the beauty of this BPSP solution is that I don't carry any credit risk. The credit risk is still carried by the card issuing bank. Now they have gone and issued a card product to this SME, who is their client. So the bank client is the SME. Now what we do is we'll typically go and work with the card issuing bank. So the role of Visa and Network is to introduce people like us to the bank. The bank will then say to us, oh, I have these, say, 50,000 SME customers who I have given a card and I've given them a limit. Today, I don't see them using the card and the limit. Always remember one thing, giving the card itself is not good enough, because the bank does not earn any money till the card is actually used. So the money that the bank earns as revenue is only the fee income that comes through when the card is used by the card holder. So in this case, if you're talking about a corporate or a business card held by the SME, unless they use it at a hotel or a restaurant, the bank doesn't earn anything. Actually, they carry a cost of managing that credit. Under Basel III, they have to report it in their balance sheet. So from a bank standpoint, they're very keen that this SME should use the card on which they have given a limit. The problem is there is no travel entertainment happening, so there's unsecured, so there's unutilized limit that is lying on the card. So what they will do, they will tell the customer, hey, are you interested in using this card to make payroll or rent payments? If the customer says, yeah, I'm interested, they will tell the customer to come on our platform, which is the BPSP platform. And that's where the SME, once they are kind of KYC'd and KYB'd by us, they'll be set up with a user ID password to access this platform. And they will come and use their card on our platform and tell us who they want to pay. So the beneficiary, as you can see on the top right side corner, could be a domestic beneficiary or could be an overseas beneficiary. And we are the intermediary where the card is being used. So as I was explaining before, card is never used directly with the beneficiary. Card, because the beneficiary doesn't accept cards. So that's the reason why the platform provided by the fintech, such like us, becomes the merchant where the card is used. We take the authorization through the acquirer. So by acquirer, I mean the one that gives you the functionality to accept cards. There are several banks who are acquirers themselves, or you can go to monoline acquirers like companies like Global Payments, First Data. There's so many of them in the market. So they provide you the functionality to accept card. So when the card is accepted, we will take the settlement authorization, and then typically in T+2 days, the money is available to us in our bank account as a settlement of the card transaction. We will then use these funds to make the payment to the domestic beneficiary or the cross-border beneficiary, which has been nominated by this SME at the time of the transaction initiation. So when the transaction is initiated on the platform, they provide us details of the beneficiary as well as details of the card. We charge the card for the amount they want to pay. T+2, the amount is available in our client held account, secure account. We can't use this account for our own purposes. It's kind of monitored by central bank, in this case RBI, MAS or MAS in the case of Singapore. So this is a secured account, which is where this money is kept, and from there the payments are made. So if you actually look at the whole ecosystem, every participant in the ecosystem, there is a value add for them. So from somebody who's the buyer, or let's say the card holder in simple English, their benefit is they get working capital financing. Now, one of the things is why we say working capital financing is that because when you use card, you always have a monthly statement that comes in. So you have 30 days when a card statement is generated, and typically after that there are about 20 to 25 days available for payment period. So on an overall basis, the maximum credit that a customer can have is 50 to 55 days. 30 days typically they will get as invoice terms from the supplier. So by using card as a settlement method, they can enjoy around 85 days of credit period, assuming that they make a payment immediately after the 30-day invoice terms. So I send you a bill at the end of 30 days and I just use card to make a supplier payment, then I will enjoy 85 days. I can enjoy up to 85 days, 30 plus 55. If I want to also take some more credit from the supplier, say I say to the supplier, after you send me the invoice, I will make you a payment after 15 days. In such a case, I am getting 45 days from the supplier and 55 days from card, so I can get up to 100 days. So that's how this whole working capital thing works. The fact that card has a 30-day billing cycle and 20-25 days, depending on which bank you are talking about, it can vary between 20 to 25 days. You are able to get up to 50 to 55 days of credit. So that's what the customer gets. They're also able to make cross-border or domestic payments. Also on cards, sometimes they will get things like cashback, or they will get a rebate, or they will get points. So that becomes an added benefit, like icing on the cake, which is what I can get and use. The card issuer, this is a bank whose card is being used, they also gain, because if the credit limit, as I was saying before, is not utilized, there is no revenue for them. So suddenly through this way, their card is getting utilized. There's a fee income that they can get, which becomes a new revenue for them. Today, all banks' card revenues have been rogered because nobody is traveling. So all the money they used to make on cross-border travel payments, when people are paying hotel overseas or restaurant overseas on business trips, all the rich 4-5% they used to make is all gone. People, used, so there was not much of interest income in the business side of the things, because unlike retail, where consumers don't pay the full card amount and pay only 10%, 15% and revolve. For corporate side of it, typically a company will not want to revolve. So the bank's earnings on the card side, when we are talking about business cards or corporate cards, have always been on the fee income, which is the income they can make when the card is used at a hotel or a restaurant, as well as when it is used cross-border, because on that they can make another 3.5%. So all that has gone. So now with this solution, they are able to monetize the credit limit and start making revenue again. So that's a major benefit for the card issuer. And for the suppliers also, because there is 50-55 days of credit that the buyer can get, they can actually pay the supplier earlier as well. And the supplier's cash flow also improves, because today, if they are giving 30-day invoice terms plus 30 or 60-day payment terms, they are out of funds for 60 to 90 days. So with this solution, they can probably negotiate with the buyer and say that, sir, if you can pay me 30 plus 15, I'm willing to give you 1% as a early payment discount. Because by getting the money faster from their customer, the supplier is also able to manage their cash flow and their working capital. So it's a chain, upstream and downstream. If my buyer pays me money on time or pays me faster, I will have the working capital to pay downstream suppliers that I have. If my buyer doesn't pay me on time or delays payment, then I need to fund that working capital that I need to use to make payments. So it's all interlinked, upstream and downstream, and that's why this kind of a method opens an opportunity for suppliers as well to get paid faster and earlier. Where can this solution be used? There is no fixed paradigm in which this solution can be used. It can be used across all types of industries. We are doing a lot of stuff on rent payments, payroll, insurances, events, taxes, duties, licenses, subscriptions, all kind of payments which are part of operating expenses, which are short-term payments for which typically companies borrow as working capital to run those payments. They can all be done through this method, because remember, as I was saying, the beneficiary does not need to accept card. They can just charge the card with us, and then we on our platform, and then we will make the payment. The important thing is they need to have a credit limit. If the credit limit is not very big, because the bank feels that the SME is not credit worthy for say a very big limit, then they can only be able to use the card for the amount they have as a credit limit. So that's the only downside of this. But the upside is unlimited. You can use to make any kind of payments. Certain types of payments are not allowed because they are considered prohibited categories, and those are mentioned here. But beyond these, any other kind of payment can be facilitated using this solution. Last but not the least, I just thought it would be good to kind of share a working example. I tried to structure this, so forgive me if some of the metrics used here are not actually reflective of the situation in India at the moment, because I'm more used to working in Singapore. But let's say theoretically, if you were to have a spend volume of 1 million rupees, and the customer is wanting to pay rent in a domestic payment, I'm not talking here about cross-border, but say domestic. So let's say that current credit period that they have is 60 days, 30 days invoice plus 30 days payment terms, and they borrow money for 30 days to make that payment at 8% cost of funding. So on a million rupees, they will end up having 6,575 rupees as a cost. There will also be a processing fee and charge the bank will do for the borrow, which is typically hovers around 1%, at least in Singapore. I don't know whether it is lower or higher in India, but it definitely shouldn't be, 1% shouldn't be very off the cost that the banks will charge. So on $1 million, they will end up paying another 10K as a processing fee. Now, if they were to use this method of BPSP that I was referring to, they will get incremental 40 days because 30 days payment terms they were already getting, invoice terms. Let's say the supplier was giving them 15 days to make a payment, which they still can get from the supplier, and 55 days on card. So let's say they get an incremental of 40 days versus what their current situation is, and at the same cost of funding, they can save up to 8,767 rupees. Also, because now they are making early payment to the supplier, let's say the supplier is willing to give them 75 basis points as an early payment discount. So that translates into a saving for them. And there is also a rebate that they can negotiate from their bank whose card they are using. A lot of banks do give rebates or reward points, but rebate is very common in corporate cards. So they negotiate 1% rebate from the bank. So there is a saving that they get. There is a cost also, which is the transaction fee. Typically, the transaction fee that we charge is around 2.5%, substantially lower if you were to go and take money out from an ATM, where you will end up paying 5-6%, or even if you use a card to make overseas payments, where you would be paying something like 3.5% just as FX fee. So it's still cheaper to use this at 2.5%, and you still save money. So from a cost that would have hovered upwards of 10-15K, you are now making money. So the moment it is kind of presented in this manner, of course, there are certain given things here, like you should be able to negotiate an early payment discount and that you should be able to get a rebate. But having said that, if you compare an apple to apple thing and look at that, what was my cost, because there is a cost if you are borrowing, versus the credit period that I can leverage for the 55 days that I'm talking about, how do I capitalize that and get a saving? Then it becomes a useful use case to talk about to SMEs. So in summary, what we are talking here about is leveraging this BPSP solution that we offer basically to help SMEs tide over their short-term working capital requirements, save money in terms of cost, get efficiencies around how they pay, and manage their cash flow and internal processes. I would want to stop here now because I kind of finished with the text of what I wanted to say. Happy to take any other questions that people may have.
So we are also running out of time, sir. Now that only 1 minute is left, I would like to thank you for being with us, sir. Thank you for enlightening us with your excellent presentation, sir. And certainly we have been able to learn more about the payment structure, about the system of payment, cross-border payments also. And with this new product that you discussed today, I'm sure most of us were not aware of these products, these services, fintech companies coming in between the payments and making it easier for the clients. Thank you very much for being with us, sir. We would like to invite you on other platforms also, sir. We continue to do so many events wherein we invite our corporate partners, and we are certainly delighted to have you as our esteemed speaker for this lecture today. Thank you very much, sir. I would also like to thank Professor Pasricha, Sudhir Pasricha, sir, for inviting you for this lecture today. Thank you very much, sir. Thank you, sir, for being with us. Have a great day, sir.
Thank you.
Thank you very much to all the participants for being with us. We would like to invite you to the session next week also. Thank you very much, sir.
Thank you, sir.
Thank you very much.